Gold is still under pressure this Friday, but we had a little pop in late morning. So is gold setting itself up for a rally ahead of next week's major Fed meeting? Joining us today is Kitco's Global Trading Director, Peter Hug. Peter, are you surprised how gold has been acting the last quarter of the year ahead of what could be the first U.S. interest rate rise in 9 years?
No, I mean, I think it's acting totally consistently. The market is the gold market is generally has a weaker tone in anticipation of higher U.S. interest rates. Some of the pros out there are aggressively short, and it gets to levels where they get a little nervous, and so you see these rallies, these bump rallies that happen, ahead of the Fed meeting next week. We saw one last week where gold popped 25. And this morning, it looked like gold was going to break on the downside, and within a few minutes, a few buy orders came in and popped gold right back up $15. So this indicates to me a market that's extremely nervous, still highly leveraged on the short side, anticipating a rate increase next week, and we can expect continued volatility until Yellen actually makes the statement.
Right. Well, Peter, we know one of the biggest contributing factors to gold's weakness this week has been weaker crude oil. Do you think gold can escape oil's death grip here?
It's kind of an odd comment. You see oil coming down and everybody's saying that's impacting gold. It is, because from a context perspective, oil's price drop, albeit it's on a fundamental basis, is reaffirming the deflationary trend that we're seeing in the commodity group generally. But if you look at it in the context that one of Yellen's yardsticks to raising rates is, inflation creeping back up to 2%, oil under 40 and possibly with a two-handle coming up is certainly deflationary and would suggest that inflation is not going to be a threat. So there is a possibility, her yardstick not being met on that, she may hold off next week.
So that said, Peter, what price range are you looking at from now until year end? I know it's a bit of a stretch, but for gold and silver here.
Yeah, well, somebody asked me that this morning. I think, between now and next Wednesday, there's going to be volatility. Some of the shorts are bound to cover ahead of the announcement, just in case she doesn't raise. So there's going to be some volatility. So I'm thinking between now and the announcement next week, the range of, I apologize for the fact this may be a bit wide, but that's the kind of market we're dealing with, is probably, 1,057 to 1,092. And then when Yellen opens her mouth, if she raises rates, I think the first knee-jerk reaction will be down, but I think it'll be temporary, and I would probably buy into the drop.
All right, Peter. Finally, I don't need you to make any predictions here, but based on your many years of experience as a trader, how do you expect markets to react next week once the Fed meeting concludes? Do you think investors could make a profit here on a metals trade?
Absolutely. It really depends on the language that comes out of the Fed meeting. I think the rate is almost incidental. The rate increase is incidental. Where I think the market gets surprised is if she doesn't raise rates. But let's assume she goes a quarter point. What'll be very important to the market will be the language following the rate increase. If Yellen indicates that, look, we're sort of looking at this and it's possible we may not even look at this again until spring or summer of next year, I think that's a good foundation for the market to start to lift off.
Thank you, Peter.
You're welcome.
And please be sure to watch next week as we launch our popular Outlook series where we ask experts their forecast for the year ahead. Thanks for watching.